Well, in the coming week, investors will focus on U.S. jobs data to see the impact of the shift in trade policy on the real economy. U.S. employers likely to reduce their hiring pace in May to rein in expenses as cautious consumers and companies reevaluated investment plans. A Bloomberg poll of economists showed U.S. payrolls rising by 125,000 in May after beating expectations in the 2 months prior. Now, that would bring the 3-month average down to a respectable 162,000. At a 4.2%, the unemployment rate is expected to remain unchanged. While still, the May jobs report is expected to show less hiring after 2 months of solid growth. President Trump is using tariffs to encourage domestic production of essential products and commodities, encourage long-term investment in the U.S., and redress trade imbalances. Now, however, businesses are re-evaluating investment plans and seek clarity on trade policy. The White House has been making regular changes to import tariff schedules and timeframes in a game of seesaw as a negotiating tactic. Concerned that the revenue will suffer, companies are growing more conscious about cost-saving efforts that risk culminating in slower labor demand. Federal Reserve officials are likely to take the labor market reports in stride. Fed policymakers, too, await clarity on how trade and tax policy will impact the economy and inflation. Investors will also look at the Fed's Beige Book, which gives anecdotal economic conditions across the country.